confirmed that there is a 2.5% hike. New import tax on select steel products will be effective immediately. We will get you details of where all this is applicable.
I think what the minister is saying is that he had raised import duty by 2.5%. And a new import tax on select products will be effective. Yeah, I don't know whether the new import tax is what is that 2.5%. So he says he has raised.
Raised. I think he's referring to the past. You're absolutely right, because the government did move 2.5% a couple of weeks earlier.
In June or something, there was that 2.5%. So is the new tax also another 2.5%? I'm still unclear from the minister's statement.
A new import tax, and that's what makes me wonder, because Anshu had been reporting that in addition to perhaps hiking the basic customs import duty, there could be some kind of a new safeguard duty that is levied on certain grades of steel. We are still awaiting more clarity on whether this is some kind of a new safeguard duty that could come in, or whether the import duty itself will be hiked by another 2.5%. Both options were on the table, and that's what our correspondent in New Delhi was actually telling us. Let's just see if we can touch base and get some conversations going on this. I believe we have Anshu. I think we have Chintan Mehta on the phone line for an analysis. Chintan, we don't know whether this is some kind of a new safeguard duty just yet, or whether this is just a 2.5% hike in the import duty. If it is a hike only on the import duty, does it help the industry at all, given the way a lot of Chinese imports are being dumped into the domestic market?
Yeah, hi, good afternoon. See, this mere 2.5%, if it's an import duty, as you say, won't materially impact any of steel players, because the discount is too much. We access that is around 6,000 to 8,000 rupees per ton. So with this merely it helps very minuscule at this point of time. So we doubt that that will change dynamics of steel industry per se with this kind of duty. The industry is demanding a safeguard duty to the tune of 40%. So with this mere 2.5%, I guess.
Two quick questions. First and foremost, you said right now the differential is between around 6,000 to 8,000 rupees per ton in terms of the landed cost, which is still so much cheaper than the domestic prices. If at all there is this 2.5% increase, in an absolute sense, you would have done your numbers. To what extent is this mismatch bridged?
As I said, at this point of time, $370 is what imported cost is coming out. And in Indian iron terms, the steel prices are quoted at 34,000 rupees. That excludes VAT. So you can just imagine it. The 370 to 2% will be hardly around $6 odd.
Yeah, so it hardly makes any difference. Now let's talk about the more interesting safeguard duty, because that's what everybody's got their eye on. And the newsflash that we have right now is that there will be a new import tax on select steel products with immediate effect. But they've not clarified whether this is a brand new import tax in the form of a safeguard duty or not. You're saying the industry was asking for a 40% sort of a tax. But what sort of a tax is this? Are we talking about an ad valorem additional duty? Because a duty of 40% itself seems like a huge sea change compared to where we are in terms of the current import duty, which stands at around 7.5% to 10% on different steel products.
Right. So there are three types of duty which normally we use on: urban anti-dumping duty and safeguard duty, and a countervailing duty. So the industry at this point is asking for a safeguard duty, which normally terms for around 2 years. That's what the nature of safeguard duty is at this point of time, and we have enough evidence that large quantity of imports have been made to India. That's what the nature of safeguard duty is. So I guess.
Chintan, sorry to interrupt there. We also have a member from the industry joining into this conversation, so let's get their views as well. Mr. R.K. Goyal, MD of Kalyani Steels, joining in. Mr. Goyal, we're still awaiting clarity on whether this is a new safeguard duty and what is going to be its value. But what is the kind of additional tax that you would want to see to protect your business?
You see, the differential in price of imported goods from China, Taiwan, and China, Korea, and Japan is almost 30%. Now, this 2.5% is a good move. It's a very positive thinking, but then it hardly meets the industry's requirement where the differential is so high. Coupled with that, there is another additional thing which has happened in last couple of days, this devaluation of yuan, which means the Chinese exporters may further reduce the price. So I don't think this 2.5% will be of any help to the industry in India getting lower imports. However, the direct thinking is very positive.
So if, since you suggest that the actual differential is around 30%, is that the sort of safeguard duty or a new import duty or whatever new taxes the government imposes, is that the kind of quantum that you would like to see being imposed?
Yes, it's very much essential for the sustenance of the industry that safeguard duty or anti-dumping duty to the extent of 30% is imposed.
Okay, Chintan, comment on that. I mean, I don't want to get into the politics of this, but then we're actually talking about, in an absolute sense, a 30% safeguard duty plus the existing 7.5% to 10% import duty levied on the product. So we're talking about effective import duty coming to what, around 40% or so? I mean, if this is how the mathematics is going to work?
Yeah, but I guess the merits of leaving such kind of hefty safeguard duty wouldn't exist at this point of time, because simultaneously, because see, we need to understand we have free trade agreements from Japanese and Koreans. Those imports are not going to stop at any cost.
Absolutely.
So, I mean, and besides all this, the demand has to pick up. These are all temporary friction measures what the government is trying to do, and that will help on the price front. But the demand has to pick up, the volume has to pick up at the end of the day. That's what our stand is at this point of time. So it looks difficult that quantum of 40% or 30% kind of safeguard duty gets lived on.
So I'm just going to take on another question from what you just mentioned, because that's again very important to gauge how effective this is going to be. Even if we get an effective import duty, which is basic import duty plus a safeguard duty, and the total quantum of taxation goes up to as high as 40%, as you mentioned, there are the free trade nations, which is Korea and which is Japan. How much of the import that we're getting right now, the cheap imports which are troubling the industry, how much of that is coming from the FTA nations?
Around 5 million units, 5 million tons.
So in terms of rough ratio percentage of the total import that's coming in?
40%.
Around 40% is coming from FTA nations. So let me go back to Mr. Goyal on this. Mr. Goyal, does it really help or solve the problem then? Because as our analyst friend is just telling us that you've still got 40% of the imports coming in from FTA nations, even if the government manages to avoid any WTO sanctions and levy a hefty import duty as high as 40%.
You see, government has to work out some mechanisms. Like you may see several things in US that the cheaper imports does not come even if from the countries FTA is there. FTA does not mean you can start dumping material in any country. So we need to have appropriate measures where the material is exported to India at the right price.
Okay. Can you give us a sense right now in terms of, in terms of just the domestic business? As Chintan mentioned, imposing high duties is one aspect, but do you see any sense of a pickup in domestic demand and therefore domestic realizations?
I think some of the issues, once they are resolved, whether it is GST or some more investment in infrastructure projects and all, the domestic demand will definitely pick up, but it may take 6 months to 1 year time.
Okay, all right, Mr. Goyal and Chintan, we leave it there for the time being. Thanks so much for joining in and giving us some perspective on this. That's the news that's coming in. We told you so about a couple of weeks back that the government is working full throttle to try and alleviate the stress of the steel sector, because with it, the fortunes of the banking sector are absolutely directly linked, and it's been in the process for a while that there will be higher import duty coming in on select steel products. Another quick voice on this. I think we've got Ankit Miglani of Uttam Galva joining in. Ankit, hi, good afternoon. Thanks for taking this call. So the flash that we have right now is suggesting that there will be a new import tax, but the finance minister hasn't clarified the quantum of whether this is an overarching safeguard, new safeguard duty, or whether this is just a hike of the existing import duty. What's the way to go forward, do you think?
Well, my understanding is that the import duty on steel has been increased by only 2.5%. This has an implication of only about 500 rupees per ton. It doesn't really make a big difference in the grand scheme of things.
So this is over and above the June hike. What you're saying is right now what we've got is an additional 2.5% increase after the June hike.
I agree, and that makes an additional import, implication of some 500 to 700 rupees per ton. It doesn't really make a big difference on the impact of the situation of the Indian steel industry at all. It's too small a step to really have any implication whatsoever.
But what more would you expect from the government, Ankit? I mean, they've been hiking duty, incrementally in small steps, but they have, put through a couple of hikes now already in the last couple of months.
Well, frankly, these kind of measures are just addressing the symptoms. They're not really solving the long-term problems. The real problems faced by the steel industry are not a function of import duties or the like. The real problems are a function of a severe liquidity crisis in the market, a severe shortage of iron ore availability in the market, severe infrastructure constraints where we don't have enough ports, we don't have enough highways, we don't have enough railway networks. I believe the entire freight corridor in the railway network is only about 900 million tons across the country. It's actually cheaper to send steel to the US than to send it to Delhi from Bombay. So we need some serious government spending to kick in to salvage the steel market and the steel industry. And these are all stopgap solutions which will provide a few months of support.
You mentioned liquidity crisis. Would you just elaborate on that, Ankit?
Well, the banks are not lending to the steel industry regardless of the condition of the balance sheets. They're not lending to my customers. My customers are short of working capital. My suppliers are short of working capital. The banks are not taking any fresh exposure. All the companies that are struggling with are already stressed, are not getting any additional funding on this.
Got it, Ankit. Yes, that's the sense we get from bankers because they're already worried about NPAs. Thanks so much. We need to move on now from this story. But that's what we have right now, that certain additional measures in the form of another import duty on certain steel products. Well, on that note, let's quickly move on.